Welcome back to the Malaysia Money Matters show, everyone. It's December 11th, 2024, and today we're going on a bit of a treasure hunt.
That's right. We're digging deep for investment opportunities, those hidden gems sparkling in the Malaysian market.
Love that analogy.
Mm.
So to get this treasure hunt started, we've got some exciting company news to unpack, right?
Yeah, absolutely. Let's kick things off with Gamuda BHD. They're making a move into the tech world.
Oh, really? I always think of them as the construction giants.
Yeah,
You know, the ones behind those massive infrastructure projects.
exactly. But they're branching out, taking a 20% stake in CloudSpace, SDN BHD for RM 18 million.
Cloud space. Does that ring a bell?
They're a Google Cloud premier partner. So this move signals Gamuda's push into cloud computing and AI.
So they're not just building bridges anymore, they're building digital pathways too.
That's a great way to put it. And there's more. They're also teaming up with Dagang Nextchange BHD to provide on-premises Google Cloud services here in Malaysia.
That's interesting. Cloud computing's a booming market right now.
It is huge growth potential there, and this partnership positions Gamuda well to capitalize on it.
Definitely something for investors to keep an eye on. So Gamuda's one to watch. What else have we got?
Let's talk about Skyworld Development BHD. They're tackling a major project developing Malaysia's largest affordable housing project.
Wow, that's ambitious. Where is this happening?
Penang. It's a massive undertaking. Over 38,000 homes with a total project value of RM 13 billion.
That's a lot of homes. It must reflect a huge demand for affordable housing here.
Absolutely. These homes will be available between RM 225,000 and RM 420,000 under the Rumah Mampu Milik Madani and Rumah Pekat Baru Madani categories.
So Skyworld is stepping up to meet that need, and for investors.
This signals a strong revenue stream potentially for years to come, a long-term play for sure.
Got it. So we've got Gamuda going digital and Skyworld building homes for the masses. What's next?
How about a telecommunications company going green?
Okay, you've got my attention. Who are we talking about?
OCK Group BHD. They're investing RM 350 million in a large-scale solar power plant through a subsidiary.
Renewable energy is certainly a hot sector these days. Makes sense they'd want to be a part of that.
And they've secured a 21-year power purchase agreement with Tenaga National BHD. So they have a guaranteed buyer for their electricity.
That's a smart move.
Yeah.
A guarantee buyer for that long. That's got to be attractive to investors looking for stability.
Exactly. It shows their commitment to renewable energy and positions them as a key player in this growing sector in Malaysia.
Okay, so we've got construction giants moving into tech property developers meeting a critical housing need, and a telecommunications company going green. Are we seeing a trend here?
I think so. These companies are really understanding the Malaysian market, aligning their strategies with current trends and government priorities.
That's a smart move.
Yeah.
So understanding these trends can help investors make informed decisions.
Absolutely. It's like having a sneak peek at the roadmap for economic growth in Malaysia.
Love that. Speaking of trends, what's the latest with Mega First Corporation BHD?
They just secured a 5-year extension to their concession for the Don Sahong hydropower project in Laos.
Hydropower.
Yeah.
So they're in the renewable energy game too.
In a way, yes. This extension guarantees continued revenue from this project for them.
I imagine securing that extension wasn't cheap though.
Right. They had to pay over US $82 million up front.
So that's a hit to their short-term financials, but it secures their long-term prospects.
Exactly. A strategic move for sure.
Before we move on, I want to ask about one more company, Faytech Holdings, BHD. What's on their agenda?
Faytech is making moves in the automotive industry. They've partnered with a Chinese state-owned firm to design and manufacture automotive seats.
Interesting. For which vehicles?
Chery vehicles.
Oh.
And it's not just for the Malaysian market.
Oh, so where else are these seats headed?
These seats will be used in Chery vehicles both within Malaysia and for export.
Expanding their reach. I like it. So for potential investors, what's the takeaway here?
This partnership opens doors to a much wider market for Faytech, particularly with the growing demand in China. Increased production sales and potentially a boost to their stock value.
Okay, so we've got 5 companies to keep our eyes on. Before we delve into the broader economic landscape, I'm curious about something you mentioned earlier, aligning with government priorities. What are some of those priorities that investors should be aware of?
Well, the Malaysian government is heavily focused on promoting renewable energy. We saw that with OCK's solar plant investment. And they're also pushing for greater digitalization and technological advancement.
Which aligns perfectly with Gamuda's move into cloud computing.
Right, exactly. So understanding these priorities can give investors insight into which sectors are likely to thrive.
It's like having a cheat sheet for economic growth in Malaysia.
You could say that.
All right. With that in mind, let's shift gears and talk about some of those broader economic indicators shaping the Malaysian market. What's catching your eye out there?
One positive sign, salaries in Malaysia are projected to increase by 5% across all industries in 2025.
5%. That's a good jump.
hmm
What does that mean for the average investor?
This signals a growing economy. Rising salaries lead to increased consumer spending, which can boost company profits and stock prices.
That's good news. But I've also seen reports about the Industrial Production Index showing its slowest growth in 10 months. Only a 2.1% increase in October. Does this contradict the positive salary trend?
Not necessarily. The IPI slowdown needs further investigation. We need to understand which sectors are driving this slowdown.
So we need to dig deeper. Look beyond the headlines.
Exactly. Analyze the trends and then make informed decisions.
Okay, so potential for increased consumer spending. But we're keeping a close eye on those IPI numbers. What other indicators are on your radar?
This one's potentially exciting for investors. MIDF Research is forecasting the FBMK LCI to hit 1,800 points by the end of 2025.
Wow, that's significant growth. What's behind this optimistic forecast?
Several factors, actually. We're anticipating an influx of foreign funds, strong corporate earnings, and attractive stock valuations, all pointing to a bullish outlook for the Malaysian stock market.
Sounds promising. So now might be a good time to consider investing in Malaysia.
It's definitely a market worth watching. There's a lot of potential for growth and some exciting opportunities for those who do their research.
Okay, so we've covered some positive company news and promising economic indicators. But what about the political landscape? Any developments there that investors should be aware of?
Yes, actually. The government has announced plans to cancel commitments to some drug manufacturers and shift to generic drugs.
Okay, so what does that mean practically for investors?
This move aims to address medical inflation, which is a good thing for consumers, but it could impact the profitability of pharmaceutical companies operating in Malaysia.
So investors with holdings in those companies should pay close attention to how this policy shift plays out.
Absolutely. They'll need to assess the potential impact and adjust their strategies accordingly.
What other political news is making waves?
The government is also planning a targeted RO95 petrol subsidy. The top 15% income group will be excluded from this subsidy.
That's a big change. What are the potential ramifications of that?
Well, it's going to affect both consumers and businesses. Higher fuel costs could lead to increased transportation expenses impacting various sectors of the economy, something to keep an eye on, especially for those invested in transportation or logistics companies.
Okay, so big changes happening in the healthcare and energy sectors driven by government policy. Before we move on to global news, anything else on the political front that investors should be tracking?
Well, there's still some uncertainty surrounding that. The classification of who falls into that top 15% income group hasn't been announced yet.
So that's a bit of a waiting game for investors.
Exactly. The government plans to make that announcement by the first quarter of 2025.
Okay, so uncertainty equals risk.
Yeah.
Got it. Now let's broaden our perspective a bit and zoom out to the global stage. Any developments out there that could send ripples through the Malaysian market?
A couple of things worth noting, CIMB and OCBC, two major banks in the region, are both vying for a controlling stake in Indonesia's Penin Bank.
Interesting. And how might that impact the Malaysian financial landscape if one of them succeeds?
It could really shake things up. It would mean a much larger market share for the acquiring bank and a stronger competitive position in Southeast Asia. It's a power play, for sure.
So Malaysian banks expanding their reach. Interesting. What else is on your global radar?
Keep an eye on the U.S. Recent data shows U.S. labor costs have been revised downwards.
Okay, and what does that mean for Malaysia? Why should investors here care about U.S. labor costs?
Well, a strong U.S. economy often benefits Malaysia. It usually means more trade and investment opportunities. Plus, low inflation in the U.S. could mean the Federal Reserve holds off on raising interest rates.
Which would be good news for global markets, including Malaysia's.
Exactly.
So it's all connected. Even when we're talking about global news, we need to understand how those events can impact the Malaysian market.
That's the key takeaway.
Speaking of global events, one that's generating a lot of buzz is the possibility of Donald Trump returning to the White House.
Yes. That's a development that investors in Malaysia need to watch carefully. His policies, particularly on trade, could have a big impact on Malaysia's export-oriented economy.
So if he does make a comeback, which sectors in Malaysia would be most vulnerable?
The sectors that rely heavily on exports to the U.S. manufacturing electronics commodities, those would likely feel the impact the most. His trade policies could disrupt those supply chains and create challenges for Malaysian companies.
So a potential Trump presidency adds another layer of complexity to the Malaysian economic outlook. Anything else on the global scene that you're keeping a close eye on?
The slowdown in China's export market is a concern for sure. Their imports have also shrunk unexpectedly in November.
And why does that matter to Malaysia?
China is one of Malaysia's major trading partners. A slowdown in their economy could mean less demand for Malaysian exports. It could also impact investments between the two countries.
A ripple effect that investors need to be aware of.
Precisely.
Okay, so we've covered a lot of ground today. Positive company news, some promising economic indicators, and a global landscape that presents both opportunities and challenges.
It's a dynamic time to be investing, that's for sure.
Wow. It feels like we've covered a year's worth of financial news.
It's been a whirlwind, but that's what these deep dives are all about, right? Cutting through the noise and getting to the heart of what matters for investors.
Exactly. So as we wrap up this Malaysian Money Matters special edition, what are your key takeaways for investors looking to navigate this dynamic market?
I think the biggest takeaway is don't be afraid to diversify.
Diversification.
Yeah.
It's always good advice, especially with all these different opportunities we've discussed.
Right. We talked about tech, property, renewable energy, even the automotive industry. Spreading your investments across different sectors can help manage risk and potentially boost those returns.
Makes sense. So diversification is key. What else should investors keep in mind?
Stay informed. The Malaysian market is constantly changing. Keep up with the news, understand those economic indicators we talked about, and don't hesitate to ask questions.
And of course, do your own research.
Absolutely. Don't just follow the crowd.
Yeah.
Take the time to really understand the companies you're investing in, their financials, their growth potential, and how they fit into the bigger picture.
Well said. Knowledge is power, especially when it comes to investing.
It really is. And remember, investing isn't just about chasing the latest trends. It's about making informed decisions, managing risk, and building a portfolio that aligns with your long-term financial goals.
So with that in mind, what's the final thought you want to leave our listeners with?
The Malaysian economy is brimming with opportunities. Do your research, stay informed, and who knows, you might just uncover your own Malaysian money-making marvel.
Love it. So to all our listeners out there, happy investing, and we'll see you next time on the Malaysia Money Matters Show. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.